So there are a series of factors that have undermined U.S. support for international trade. And trade itself in the United States is not necessarily disliked, but President Trump has been able to tap into a real sense that things in the United States are going wrong. And there are a few factors here at play. One is that manufacturing jobs in the United States peaked in 1979. In contrast to jobs themselves, you have manufacturing production in the United States continuing to grow up until about the pandemic period. And since then, it's been flat. And so if you contrast this with, for example, when the Course FTA was negotiated, there was a lot of discussion at the time of, yes, the United States employs fewer people in manufacturing, but at the same time, our productivity has grown. And with many things, technology has come into place, and that has taken and allowed us to produce more with fewer people. And there are truths to that argument. But at the same time, you have the situation to where for about four decades, from the 1970s up until about the mid-2010s, in essence, all income gains went to the highest income levels. And those in the middle and lower class essentially had stagnant wages. And so when you combine a decline in manufacturing jobs, stagnant wages, which means lost purchasing power for individuals, together in an environment to where, with some other factors that aren't economic, such as cultural trends, you have someone like Donald Trump come around who's able to tap into this sense that the American dream is either lost or is dying, and that something significant has gone wrong and needs to change. And so these different trends took and really kind of made the American public more open to rhetoric and the ideas of someone like President Trump. And so that's kind of how we got on the domestic political side to this position. At the same time, there are external factors at play as well. If you look at US manufacturing production, it grew slower than most of the rest of the world over the last 50 years or so. And at the same time, China's manufacturing production took off. And now China is the largest manufacturing power in the world. And so in 9 out of 11 key manufacturing sectors, China surpasses the United States. If you look at certain things on the defense side, which is clearly critical for the US alliance system, the United States has the capacity to produce about 5 commercial ships and 5 naval vessels per year. China is the world's largest shipbuilding producer. Also, based on research I've done looking at the Ukraine war, you have a situation to where the United States isn't able to produce the armaments it needs to take and conduct a war over a long period of time. So if we look in the period of the Biden administration, what you see is that if you combine the artillery that is provided by the United States and all of its allies and partners together, it is surpassed by the number of artillery that North Korea provided to Russia over the same period of time. So when you think about this in that context, it shows that there are significant gaps in the U.S. industrial position. And the Biden administration, the first Trump administration, both looked at these issues. There have been issues like semiconductors, shipbuilding, high-capacity batteries, and other areas that have been identified. But there is a growing bipartisan consensus that the U.S. industrial capacity has waned and that something needs to be done to take and address that. I think first we need to kind of just sort of touch base on where there is continuity between the agreement that Japan reached with the United States and the agreement Korea reached. In essence, both agreements are structured around the idea of trading off investment in the United States for lower tariff rates. And if we look at the structure of the deals, there are other components. Both Korea and Japan pledged to buy more US energy products. You have some non-tariff barriers that are addressed, but on the whole, these deals really center around the investment pledges. And so when we look at some of the differences, one, Japan is providing more overall investment to the United States than Korea. The Japanese government pledged $550 billion. Korea pledged $350 billion in total. But these deals are also structured differently. So if we look at the Japan agreement, Japan has to invest all $550 billion in the United States by the end of the Trump administration. Korea was able to negotiate an ability to take and break it up into tranches. And so Korea will invest $20 billion over 10 years. And then the other aspect of the Korea deal that is slightly different is that it's in essence split into 2 parts. One is a part that will cover things like semiconductors, critical minerals, pharmaceuticals, energy, and potentially some other areas. But $150 billion is dedicated to reviving the United States shipbuilding industry. And this is under what's called the Make America Shipbuilding Great Again package. And so while Japan's agreement also nominally suggests that it will work on shipbuilding, ultimately most of the investment in the United States under these two agreements is going to be through Korea on the shipbuilding side. They're going to be the primary partner for the United States. And so if we go beyond sort of that structure, there's a couple other things that are different as well. One, the Japanese agreement doesn't specify how the funds will be provided. And so what this means is the Japanese government has said that this will be primarily through a combination of loans and credits, but there is nothing to stop the Trump administration from saying we want cash up front, which is what they've asked from Korea. And so Korea is going to be providing $20 billion in cash each year. So these are some significant difference in the two agreements. At the same time, you get into some of the details, and Korea was able to negotiate slightly different provisions in terms of how things would work, in terms of who will be on some of the committees, who will take, and for example, Korea is able to provide someone to oversee the projects, to where Japan didn't negotiate a provision similar to that. And so you have these sort of smaller, subtle differences as well in the agreements that touch not only the overall package and financial side, but also some of the nuanced details between the two. So part of this dealt with the difference in terms of Korea and Japan's foreign exchange reserves. So Korea only had about 420 billion in exchange reserves. And so if it were to take and try to spend down 350 billion in cash over a short period of time, it would eat up a lot of Korea's reserves, potentially put the won at risk of a run. And so there really needed to be a focus to limit the amount of direct cash that transferred. For Japan, in addition to trying to take and keep this to simply credits and loans, if the United States were to ask for cash up front, the other significant difference is that Japan has significantly larger foreign exchange reserves, over $1 trillion, and so that gives them more flexibility to be able to take and do this if the U.S. asks for cash up front. I think the first thing to keep in mind when thinking about the agreements is that we, in essence, live in a new world. Tariffs are the primary tool the Trump administration plans to use in terms of economic engagement. And so there wasn't necessarily an option here because, on the one hand, while there has been some discussion of whether Korea could simply take and pay the tariff and move on, both Japan and the EU had negotiated agreements with the Trump administration. And so that would have placed, for example, Hyundai and Kia at a competitive disadvantage to their competitors in the US market. The US market is critically important for Hyundai Motor Group. It's their largest market. And so when you look at it that way, you had this competitiveness issue that needed to be addressed. At the same time, I think it's also important to realize that the Trump administration, if, say, South Korea decided, well, we'll simply subsidize the difference to make sure that Hyundai and Kia is on a stable footing with their partner or competitors in the US, there was nothing to stop the Trump administration from raising the tariff on autos or other goods. And so ultimately, you could try to pay the tariff, but the reality is the United States most likely would have taken and tried to increase the pressure on Korea. The other thing I think that's important to keep in mind is that this isn't just about the trade and economic relationship. It's also about the security relationship. Korea didn't want the economic relationship to interfere with the security relationship. It's important for South Korea to maintain a strong alliance with the United States. And while the Trump administration is pushing for Korea to take on more of the burden, even if Korea does that, there still needs to be a transition period. And so making sure that the security relationship stayed on a stable footing was another important objective. And there's a third part to this, which I don't know is often discussed in this context, but the agreement reached to allow South Korea to develop nuclear subs. We should really view this as tied into this agreement as well. And so if Korea would have said, we're simply going to pay the tariff and not reach the deal, there's a very good chance the United States wouldn't have agreed to allow South Korea to build nuclear subs. So I think when you look at this from an economic perspective, from a security perspective, and even from a longer term perspective in terms of the type of hardware Korea might be able to develop, it's important to keep in mind that all of those factors were pushing Korea towards a deal rather than just simply say, we'll pay the tariff. Now, in terms of the long run, how will this benefit Korea? Let's just focus on the economic side here. At the end of the day, it's going to be very important on how Korea picks the projects for investment in the United States. While Korea, as part of the deal, negotiated a clause saying that any investment needed to be commercially viable, what you need to take and focus on as well is how does this advance specific economic interests for South Korea as well. The Trump administration in the early agreements with Japan has sort of indicated that you need to be focusing on things like infrastructure. So you have a gas plant, an LNG export terminal that are going to be financed by Japan. You have synthetic diamond production that's going to be financed by Japan, which is important for the semiconductor industry. But looking at this, I think it's important for Korea to consider two things. One, what is the ability of Korean companies to take and provide the parts and the equipment that are needed to take and produce these new facilities or new pieces of infrastructure? But two, are those going to be traditional infrastructure and other types of projects to where it won't really push the technological edge of Korean companies? Or will Korea try to take and put some of its investment in things like small modular reactors, which are at the cutting edge of nuclear power, and try to take and develop the skills needed to become a larger producer globally for something like small nuclear reactors? So being strategic in how Korea does its investments, I think, is going to be an important factor in determining how successful this arrangement is from the Korean perspective. Both Japan and Korea have indicated that they plan to keep their deals. This is, I think, largely influenced by the importance of the auto industry and the trade relationship for both countries. If you look at exports to the United States, for both Korea and Japan, the US is the largest export market for their auto industries, and it's also a significant portion, both countries' cases, probably a little bit under 30%. And so what's important to keep in mind is that the tariffs the Supreme Court overturned did not apply to the auto industry. These tariffs were done under what's called Section 232, which is a national security provision. And so those were never in question. And so whether the Supreme Court invalidated the what are called IEEPA, so International Emergency Economic Powers Act tariffs or not, the United States always had the leverage to take and maintain tariffs on not just autos, but there was a 232 tariff on steel, which is another important industry for both Korea and Japan. You also had the potential for Section 232 tariffs in areas such as semiconductors, pharmaceuticals, critical minerals. So even when you go down from some of the sort of key industries right away in the auto and steel industry, you had some of the additional industries that are important for Korea and Japan that were going to be hit not by the IEEPA tariffs or anything the administration put in place to replace them, but that were going to be hit by these Section 232 tariffs no matter what. And so I think that's sort of incentivized both Korea and Japan to sort of take a more cautious approach and maintain their deal. Now, what we don't know going forward is how the administration will ultimately come down on their Section 301 investigations. They have put in place for 150 days, because statutorily they can only do it for 150 days, what is called a Section 122 tariff, which relates to, in essence, a balance of payments crisis. They're similar to the IEEPA tariffs, is a lawsuit going on arguing that the administration doesn't have the authority to do this, largely because the United States has a floating currency, and when you have floating exchange rates, you can't have a balance of payment crisis. And so the United States isn't in a balance of payment crisis. The US has also taken and exempted Canada and Mexico from the Section 122, and there is no provision within the law to exempt countries. So there are different reasons why the administration may not be using this properly. But from a practical standpoint, given the rate at which the court system will likely proceed, and given that as this case moves through the court system, the courts will likely allow the administration to continue collecting the tariffs. They won't stop the administration from doing that. By the time this would reach the Supreme Court, if the Supreme Court would decide to take and hear this case as well, the 150 days would have already passed. So for all intents and purposes, the Section 122 tariffs are in place until July 24th. Then you have what the administration is doing to try and replace the IEEPA tariffs, which is using what's called Section 301. In essence, this is a provision to look at countries' unfair trade practices. The administration has just announced the first of the investigations. It's going to look at excess industrial capacity in different countries. Korea is one of the countries that is going to be investigated. There will be also additional Section 301 investigations will come forward. And the goal of the administration is, in essence, to try and recreate the tariff structure it had under IEEPA, so that way it can maintain the leverage it had during the negotiations. What we don't know is whether by going down the Section 301 route, the administration tries to take and apply additional leverage and perhaps reopen things on their side, or whether they do this in good faith and simply recreate the tariff structure that was in place before and just keep everything the way it was. And that's where some of the uncertainty comes in at this point. I mean, like the IEEPA tariffs, they hit things like K-beauty products and, certain petrochemicals and things. But, really when you get down to it, Korea had to protect the auto industry, and doing that meant cutting a deal. And it was the same for Japan. It had to protect the auto industry, and that meant cutting a deal. Yeah. I mean, this is why, if you look at everything the Japanese have said publicly, they have insisted that everything will be conservative investments that are assured to take and make a profit. And so, I don't know if Korea will hold quite that stringent a standard, and I don't know that that would be wise on Korea's part, but Korea does at the same time have an interest in making sure that its money does not go to waste as well.